And now let's talk about Airbnb. Hi everyone, I appreciate you tuning in tonight. Thank you for joining us again. I'm James, market strategist at uSMART Securities. Welcome to Talk Stock with James series. Tonight we were talking about Airbnb. Can the travel demand in 2023 sustain Airbnb rally? This Talk Stock with James series is conducted every alternate Thursday, 7:30 p.m. The next one will be 8th of June. And if you are interested in listening to the webinar replay after this live webinar, please go to YouTube and search for the Talk Stocks with James channel. I'll be posting the replay video this weekend. Again, if you would like us to discuss a particular stock during our next webinar, please recommend to us using the Q&A box. Please note that I only cover stocks listed on the US, Hong Kong, or Singapore stock exchanges. And most likely, I will talk about Meituan in the next webinar. And I will also be conducting a basics of investing webinar organized by SGX Academy on 9th of June. If you are interested in attending, please find the registration link in the chat box of this Zoom webinar. I will be sharing about investing 101 on stocks, REITs, and ETF. And let me begin with some disclaimer first. This presentation is presented to you for education and sharing purpose only, and it does not constitute to any form of advice. Past performance is not indicative of the future performance. And now let's talk about Airbnb. The company is an online platform that connects travelers, tourists with hosts who rent out their properties, offering unique and personalized accommodations worldwide. Airbnb logo itself is a combination of four simple symbols: a head to represent people, a location icon to represent place, and a heart for love, and then an A for Airbnb. Airbnb is one of the strongest brands in the world. It's the only launching brands among the top 100 best global brand. Airbnb is ranked as the 54th best global brand with a brand value at 13 billion. And Airbnb, along with companies like Uber, Lime, YouBuy, Just Park, Spot the House, Couch Surfing, and TaskRabbit, is a part of the sharing economy. Unfortunately, not many sharing economy innovations or companies find success. Examples include GBike, OBike, Mobike, and ShareBike SG, which all cease operations in Singapore. Some companies succeed in their home country but fail in other countries. Uber succeeding in the US and many European countries, but pulling out from Southeast Asia. Despite a lot of challenges, Airbnb is considered one of the most successful sharing economy innovations. If you believe in the sharing economy concept, I think your best choice here is either Airbnb or Uber. Airbnb aims to provide travelers with unique and genuine experiences by offering accommodations in lesser known places that they may not have considered before. So instead of staying in typical hotel located in popular tourist areas, Airbnb allows tourists to rent accommodations in local neighborhoods. And this gives them the opportunity to immerse themselves in local culture, live like a local, and explore hidden gems that are off the usual tourist path. This is why when you visit traditional booking websites like booking.com or Agoda, they typically will ask you to enter your destination and dates in order to search for a hotel. In contrast, Airbnb allows you to search for accommodations using unique filters such as amazing views, castles, camping, or island. Airbnb has become both a noun and a verb in pop culture used all over the world. And this is part of the reason approximately 90% of all traffic to Airbnb is via organic search coming through direct or unpaid channels. Okay, in comparison, the percentage of traffic for Booking.com through direct and organic search is 69%, while for Expedia, it is 70%. To put it simply, Airbnb relies less on paid search to attract traffic compared to Booking.com and Expedia. Approximately 6% of Airbnb's traffic come from paid search, whereas for Booking.com, it is 15%. And for Expedia, it is 19%. And it's important because marketing expenses as a percentage of total revenue for Airbnb is just 14%. For Booking.com, marketing expenses represent 46% of total revenue, while for Expedia, it is 52%. So Airbnb relies a lot of word of mouth, and I would say younger adults prefer Airbnb. 60% of its users are millennials. Airbnb offers you the unique living experience. You got to live like a local or live with a local. Other reasons that you may choose Airbnb, including branding and affordability. Airbnb is generally considered to be more cost-effective compared to hotels, since hotel fees already include the hidden costs such as facilities, amenities, and cleaning services. However, personally, I prefer staying in hotel because I perceive them to be safer and more secure. I find hotels to be more comfortable as everything, including the bathroom and mattress, is more predictable and standardized. I believe that hotels charge higher prices for a reason, as they provide certain quality standard and services. Nevertheless, I believe that both hotels and Airbnb can coexist and cater to different preferences and needs. The main competitor for Airbnb is Booking.com. When considering market share based on monthly active user, Booking.com holds the largest market share with 34%, followed by Airbnb at 26%, Expedia at 7%. If we were to look at market share by share of traffic, Expedia has the highest market share with 22%, followed by Airbnb at 19% and Booking.com at 18%. Currently, Airbnb has approximately 6.6 billion active listing, while Booking.com has a significantly larger inventory of hotel with 28 million listings. However, according to Morgan Stanley's projection, Airbnb is expected to add 900,000 new listings this year and 600,000 new listings next year. So this indicates a CAGR of 11%. So the growth rate is still quite exciting. Having more listings also increases the likelihood of someone booking a room, leading to higher revenue for Airbnb. Another way to increase listing or bump up your revenue is through acquisitions. However, Airbnb has stopped acquiring companies since 2020, so I'm not so hopeful for more acquisition itself. Airbnb also dominates the private accommodation industry partly due to the network effects it creates. In simple terms, network effect means when more hosts list their properties on Airbnb, it will attract more guests to the platform, making it more valuable for everyone involved. As more guests book accommodations through the platform, it encourages more hosts to list their properties to meet the growing demand. So this positive feedback loop generates a network effect. And one strategy employed by Airbnb to attract more hosts is the Airbnb Super Host program. This program requires hosts to meet certain criteria, such as maintaining high overall rating to become a super host. And once a host achieves the superhost status, they enjoy benefits such as higher visibility in search results, which helps attract more guests and earn more money eventually. And currently, approximately 19% of hosts has achieved superhost status, and on average, they earn 60% more revenue per day than standard hosts. One important thing to take note is the take rate. And Airbnb charges a low commission to the host. The take rate in Airbnb business models refers to the percentage of money that Airbnb keeps from each booking made through the platform. It is the portion of the total payment that Airbnb earns as its own revenue. To put it simply, Airbnb takes a cut from the host and also take a cut from the guests. Typically, Airbnb charges a 3% commission to the host and 12% to the guests. For example, if the host charges $100 per night, Airbnb would receive $3 from the host, and the guests would need to pay a total of $116, with Airbnb retaining $12. This means Airbnb overall take rate is 15% or $15 in total. Since the host pays only 3%, they are more inclined to list their properties on Airbnb. This is a key factor contributing to Airbnb's significant market share in terms of total listing. Additionally, Airbnb overall take rate is lower compared to other competitors. In the latest quarter, Airbnb take rate was 13.8%, while Booking.com had a take rate of 14.7% and Expedia had a take rate of 16.1%. This suggests to you that Airbnb has the potential to increase its take rate to generate more revenue. But I reckon that Airbnb is uninterested in raising the take rate as of now. If you look at the quarterly take rate or the yearly take rate, it's always 13% to 14% since 2019. I think Airbnb wants to maintain a relatively low take rate to continue attract more hosts and guests to their platform. And one biggest risk that Airbnb face is the crackdown measure. One significant hurdle is the tighter regulations imposed on Airbnb in certain countries. While the company has the potential to bring in tourists and increase attention and more income for the neighborhood, the long-term consequences can be a threat to housing affordability and availability if many housing units are converted into vacations renters. This is why many governments have decided to impose restrictions, rules on Airbnb. And let me share with you some restrictions on Airbnb in certain countries. In Singapore, according to URA regulations, all privately owned residential properties that are rented out for accommodation purpose must comply with a minimum stay durations of 3 months. Additionally, it's not allowed to rent out HDB flat to tourists through the platforms such as Airbnb. And even though Thailand is the most searched destination for Chinese Airbnb guests, technically Airbnb is considered illegal in Thailand. In order to offer short-term stay in Thailand, hosts need to acquire a hotel license. And Airbnb is legal in Japan, but the property itself must be registered with local government authorities, and the property can only be rented out for a maximum of 180 days a year. There are also restrictions on the Airbnb operating in certain cities such as Santa Monica, New York City, Amsterdam, Paris, and Barcelona. Basically, governments limit the number of guests, nights, and times a property can be rented out, and demand certain safety precautions and information provision itself. Additionally, some governments require the host maintain primary residency in the property they list on Airbnb. So to me, the restrictions from government is one of the biggest risks for Airbnb, and there is nothing much the company can do about it. On a side note, Airbnb also pulled out of China last year as well. So why Airbnb pulled out of China? It say that it's due to pandemic challenges, but I reckon the more logical explanation is that Airbnb is not localized enough to compete with the local competitors. So the characteristic of the Chinese market is that when something new comes from outside, its business model or innovation will get quickly absorbed by the local culture and then further integrated in a more localized manner. So to put it simply, Airbnb's business model was copied by China companies such as 途家、美团民宿、小猪民宿. All in all, China's growth was below expectations for the company, but China market probably doesn't matter much as well because it previously only accounted for less than 1% of the total revenue. So when considering the overall revenue contribution from the Asia Pacific region, it accounts for only 7% of the total revenue. Similarly, in Latin America, it also ranged between 7 and 8%. Therefore, the primarily battleground for Airbnb remains the North America and EMEA region, which contributed to 85% of the total revenue. So Asia Pacific and Latin America generally have lower average rental prices compared to European countries and US itself. Latin America is $91 per room night, whereas Asia Pac is $116 per night. In North America, the average nightly booking rate is $242 with a year-on-year growth rate of 9%. EMEA has an average rate of 128% with a year-on-year growth of 3%. However, the European region itself, right, has experienced significant year-on-year growth in the gross booking value and the number of nights booked as well, with a growth rate of 42% and 47%. Therefore, to make it probably make more sense for Airbnb to continue focusing on the North America and the EMEA markets. Next, I also want to focus more on the night and experience book, the gross booking value, the gross booking value per night and experience book as well. Basically, the number in 2020 and 2021 are disappointing in terms of the year-on-year growth itself because of COVID. So COVID actually makes all the data haywire because the world was closed or partially open. But the only silver lining here is, despite COVID measure, the rental fees per night keep growing in 2020, 2021, and 2022. And I would say that it is more logical to analyze the data from 2022 and compare it with the figure from 2019. By doing so, you will realize that the total bookings in 2022 were 20% higher than the 2019 level. And the gross booking value are also showing you a substantial increase of 66% higher compared to the pre-COVID levels in 2019 itself. Furthermore, the gross booking value per night was 38% higher than in 2019 itself. And if you were to look at the quarterly year-on-year growth, you could also see that 2022 quarterly growth and 2023 first quarter growth are also higher than the 2019 level itself. In addition, we would like to analyze the quarterly revenue growth, the revenue growth itself. In 2022, the revenue growth was 70% higher than the level in 2019. Moreover, in the first quarter of 2023, the revenue growth is 117% higher than the growth experienced in the same quarter of 2019 itself. And there is also good improvement in the EBITDA margin. In 2021, the EBITDA margin was 27%, but it was 35% in 2022. Typically, quarter three that we've seen in the past few years basically tell you that the third quarter is considered the strongest quarter for Airbnb. This is because both Europe and US typically experience a significant influx of tourists during third quarter, resulting in higher revenue and EBITDA margin itself. So for example, the third quarter 2022 revenue is 75% higher than the same quarter in 2019 itself. And it is also 37% higher than second quarter. And the EBITDA margin is 51% compared to 34% in the second quarter. And I also reckon that Airbnb is one of the best stocks poised to benefit from the post-pandemic period when people are all eager to travel globally. Everything is basically more expensive now, especially the air tickets. This is why you might want to book a more affordable accommodation, which is Airbnb. Basically, Japan reopened its border last October, and China followed suit this year, indicating a positive outlook for the travel industry in 2023 itself. And the travel accommodation sector is expected to exceed the pre-pandemic level in 2023. However, the outlook for 2024 is not so optimistic. The US vacations rental market is projected to grow at a CAGR of only 5% from 2022 to 2030. In Europe, the vacations rental market is expected to experience an 18% growth compared to 2019 level, but this growth is likely to taper off after 2023. The projected growth for the following years until 2027 is around 20% to 23% higher than the 2019 level, suggesting limited growth beyond 2023. And given that Airbnb total addressable market is not really promising, it seems likely that Airbnb may need to explore additional revenue source as well. And one potential avenue is advertising revenue. As mentioned by the CEO, Brian Chesky, previously he hinted that they may launch sponsor listing and an advertising platform for Airbnb. So it's worth noting that the Booking.com currently generates approximately 900 million in terms of advertising revenue, which accounts for 5% of the total revenue. Therefore, if Airbnb decides to pursue advertising, it could potentially become a significant revenue stream for the company in the future. And here I also want to show you my fair value that I arrived using the discounted cash flow model itself. And to give you the conclusion first, the fair value I derived is $112.78 for Airbnb shares, representing an upside of 6.69% based on yesterday closing price of $105.71. There are a few inputs to arrive at these conclusions. Firstly, I assume a WACC of 8.9% for Airbnb. Secondly, a terminal growth rate of 4.3%. And the terminal value of Airbnb is also derived through the use of DCF models and also the terminal multiple method where we apply a multiple of 30 times to the 2024 earning per shares. In conclusions, I reckon that Airbnb is a strong investment options to benefit from the post-pandemic recovery alongside airlines, stocks, Booking.com, and other hospitality stocks. Typically, investors often consider a choice between Airbnb and Booking.com because both companies have the potential to really do well in this industry. They compete through differentiations, with Airbnb focusing on vacations, private renters, whereas Booking.com focuses on hotel accommodations. But I don't believe that Airbnb will completely replace hotel. I basically anticipate that Airbnb will do well, will perform well this year, but I have concerns about the performance next year and going forward. Additionally, I am uncertain about how much the market share Airbnb can capture from Booking.com. Considering portfolio allocations, I would suggest that allocating less than 2% of one's portfolio to Airbnb. And I will end my presentation here. Please subscribe to my channel, Talk Stock with James. And now let's proceed to the Q&A sessions. Okay, let me answer the first question. What is your take on Meituan? Okay, I would say that Meituan is an interesting investment case. I don't have time to look at the earnings that released just now, but I would say that on the first glance, I would say that the growth rate is okay, but I reckon the growth was probably below market expectation for the past many quarters, and hence the underperformance in the share price that we see today. I will try to cover Meituan in the next webinar, so look out for that. In any case, I would say that other than Tencent, Pinduoduo and Meituan are always two of my top Hong Kong tech stocks choices that I'm highly interested in. Okay, this is a good question. Nvidia is going to the moon. Can I still buy? First of all, Nvidia is a good company. I would say that if you want to gain exposure to the semiconductor industry, you should always look at ASML, TSMC, Nvidia, or some semiconductor ETF, such as SMH ETF or SOSS ETF itself. And yes, Nvidia is going to the moon tonight indeed. It is super rare to see a 750 billion market cap company to jump 25% in the pre-market that we see now. And the market cap has the potential to close above 1 trillion tonight. I reckon that the earnings are quite good. They basically exceed the expectations. So the analysts and investors tonight are quite excited about the earnings. I mean, quite excited about the share price movement itself. It's quite difficult to either go long or go short in Nvidia now, because Nvidia will open at record high tonight at 9:30 p.m. I believe many investors will eager to go short, but there are also a lot of hedge funds are already in the short positions. basically, you can see a lot of reports showing that NVIDIA is one of the most popular short trades for many, many months. So a lot of hedge funds will try to cover their short positions probably tonight, and hence push the stock price higher. Tonight, NVIDIA will be the talk of the town. A lot of panic and euphoria tonight. I would say NVIDIA is probably overvalued when it actually went above 260 or $270, but I never once thought that it would be a good short trade, because I believe the market can always stay irrational longer than the short sellers can stay solvent itself. All in all, it's a good company. I would say please enjoy the show tonight. But just because NVIDIA is going to open 25% higher tonight, it does not mean that you really need to take a position. Okay. Will S&P 500 close higher tonight? Yes, I think the future market is up now for S&P 500 and Nasdaq because of NVIDIA. A lot of tech stocks or semiconductor stocks are trending higher in the pre-market now. But if you were to ask me, will S&P 500 end higher in the month of May? I would probably say no. Sell in May and go away can still happen this year. I would say that S&P 500 will close lower in May due to seasonality. I think yesterday night, Janet Yellen said that the debt ceiling deadline is 1st of June. But even though the debt ceiling were to be raised by 1st of June, it does not mean that everything is good, because the rating agencies such as Moody's, S&P Global may still downgrade US bond rating. All in all, I am not excited about US stock market in general. I am still short-term bearish, but bullish in the mid to long term. My worst case scenario is still 3,600 this year itself. So how much of the portfolio should we invest in Airbnb? I would say that given the uncertainties and we do not know how long the post-pandemic recovery euphoria can last, I would say that less than 2% of your portfolio. Okay, we have run out of time. Thank you all for attending, and I shall see you in 2 weeks' time. And thank you. I hope to see you soon.